After tapping the previous cycle high of 69K, Bitcoin bounces back with a V-shaped recovery following the flash crash below 60K. What's behind all this demand? Meanwhile, more trouble is brewing under the surface in the broader market, as the Fed communicates that it intends to keep rates higher for the foreseeable future amidst worsening conditions in the banking sector and the economy. Plus, we look at the devastating impacts of high inflation in places like Egypt and why people stash dollars underneath of their mattresses savings. It's clear that things are breaking, but can you articulate why? Welcome to the Wednesday, March 6th edition of the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. Here at Swan, we're on a mission to educate the world about Bitcoin. So please like this video and subscribe to the channel. It'll help us cut through the noise on YouTube and teach more people about Bitcoin. And as always, if you have questions about Bitcoin, there's no question that's out of bounds. Feel free to send us an email at daily@swanbitcoin.com, and I personally will respond and get you the help that you need. And with that, let's get into today's show. Bitcoin's price crashed to under 60K yesterday after reaching an all-time high, but it bounced back to $67,000 faster than Xavier Worthy running his 40-yard dash at the Combine. That's a V-shaped recovery if I've ever seen one. And unlike the SVB collapse or the economy after COVID, the V-shaped recovery happened without any Fed, government, fiscal, or monetary policy interventions. There was no money printing, just pure market demand. And lots of it was driven from the ETFs. There was $648 million worth of net inflows yesterday, which is staggering, considering that GBTC had outflows of $322 million. BlackRock's IBIT pulled in a staggering $788 million on the day. This was the third highest day in net inflows since the ETFs launched. And this was on a day when Bitcoin's price was dumping more than 10%. And I know a lot of you are new to Bitcoin, so you're probably asking, what does buy the dip mean? No, it's not a tobacco product. It means that when the price dips down, people rush to go buy more Bitcoin because they're cheaper. And yesterday, the ETFs bought the dip. In this great chart from Bitcoin analyst Dylan LeClaire, you can see that BlackRock and Fidelity alone have bought 284,000 Bitcoin, which is 1% of the total supply of Bitcoin that will ever exist. Meanwhile, in traditional markets, the pressure continues to be tight. Fed Chair Jerome Powell announced just this morning that they don't believe it'll be appropriate for the Fed to cut rates until they have greater confidence that they can keep inflation moving substantially towards 2%. Here's the question. Will the market be able to function without breaking if the Fed does not make rate cuts? Since the Fed has implemented tightening policies, or QT, quantitative tightening, there's been trouble brewing in the markets. In this chart here, you can see that delinquency rates among large banks hits 3%, which is the highest number in 11 years. That number for small banks reached 7.8%, which is the highest number ever. Speaking of banks, New York Community Bank continues to be a regular guest on our show. Its stock was halted after falling 42% on the day. We always contrast the fiat world with the Bitcoin world. And in the Bitcoin world, compare NYCB to MSTR, MicroStrategy stock, which is up over 20% today. We've been communicating with you about the MicroStrategy flywheel, and MicroStrategy executed that flywheel today. MicroStrategy was able to raise over $700 million at a rate of less than 1% that's due in 2030, with all of those proceeds going to buy more Bitcoin. Back to the struggling economy. The government has always used this tactic in that they will communicate a number and then go back and revise that number at a later date to make people believe that the market is stronger than it actually is. When you take a look at the job openings number, you can see that they've revised this number 6 out of the last 8 months. So much for a strong job economy. And when there's less work, jobs, and opportunity out there, people who are well off just dip into their savings. But most people in America right now go and borrow money that they don't have via credit cards. Here's an interesting stat. Interest payments on non-mortgage debt hit a record $573 billion and will likely surpass interest payments on mortgage debt for the first time ever. Beyond the US, you see major economies like Germany and Japan are in technical or non-technical recessions, but things don't look good. There's no growth out there. I think everybody out there senses that something is wrong. They're working harder for less, and they're recognizing that all systems around them are failing. Educational, political, judicial, financial. There's something clearly going on wrong in the markets, but people just aren't yet quite able to articulate it. And what Bitcoiners have been saying all along is that when the money is broken, everything that's built upon money or propped up by money will be broken and inefficient as a result. Money has been the base layer for how humans have communicated, transferred value, and traded since the beginning of human civilization. That's why getting it right is so important. Lynn Alden's book, Broken Money, goes into exactly how money has changed over time and how it's been broken through fiat manipulation and central banking failures. In her book, she uses an example of how double-digit inflation has impacted the lives of people in Egypt, a place where she lives. She gives a little background on this in a talk that she did at Princeton University about a month ago. Take a listen.
This chart here shows Egypt's inflation rate over the past 60 plus years. And as you can see, they spent about as much time in double-digit inflation as they have not been in double-digit inflation. And they're by no means the worst example of this. During this chart period, there were dozens, literally dozens of countries that hyperinflated or had triple-digit inflation and therefore roughly hyperinflated, or had just nonlinear currency resets. And so the fact that they actually managed to have under 50% inflation the whole time puts them not anywhere near the worst camp. And you can imagine living and working in this environment for this long. You're in a constant treadmill. Your wages, your savings, you're in a constant treadmill. If you're not getting a 10, 15, 20% nominal raise every year, you're getting devalued. Like your share of the network is diminishing. And then even if you are, your global purchasing power is very hard to keep up. Your ability to import things, your ability to fly around the world, travel to other places. And so everybody's on this constant treadmill. And when you talk to people there, there's this really interesting thing is that you're almost like in two worlds at once. You're in 2024, and yet I know, for example, the anecdote I like to point out is I know a physician there, and he stacks physical cash dollars that he buys in the gray market and stuffs them under his mattress or the equivalent. And that's his savings technology for liquid savings in 2024.
And just this morning, for the fourth time since early 2022, the Egyptian pound has been devalued against the dollar. This time, it was devalued by almost 38%. Imagine waking up and 38% of everything you've ever worked for being wiped away. Here in America, we're complaining about 5% interest rates. The Egyptian central bank raised interest rates 600 basis points to 27.25%. They've done that because they needed a way to tackle their 30% inflation problem. For people in Egypt, Bitcoin isn't just something to speculate on. It's actually a lifeboat. It's the difference between having enough money to afford to live and not being able to afford to live. Bitcoin has increased over 1.4 million Egyptian pounds today, and almost 150% over the last 48 hours. This is why Bitcoin matters. So when people like Jim Cramer ask, what has Bitcoin ever done for society? You can point them to an example like this. It's easy to talk about Bitcoin being a speculative asset that has no value when your currency isn't devaluing by 38% overnight. We live in a networked world, and decisions are no longer linear. When central authorities make one decision in one area of the world, it impacts so many different things and so many people across the world. And centralized finance, banking, and monetary policies are wreaking havoc on people all across the globe. I'm optimistic that humanity will come up with different solutions in the future, but right now, Bitcoin is the only clear and viable solution to help us out of this mess right now. So here's some advice from Michael Saylor in his latest interview that he did with Natalie Brunell at Bitcoin Atlantis in Madeira.
So you've now been through your first full 4-year cycle, the highs, the lows. What's your biggest lesson that you took away from the bear market?
I think the lesson of Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin. Ignore the noise.
And while, yes, my advice here is to just buy Bitcoin, but I also realize that your level of conviction and allocation rises with the level of your education. And so at Swan, our mission is to educate. Educate yourself with another great resource about Bitcoin from Swan and Natalie Brunell, the Welcome to Bitcoin course that we've created. It'll help take you from newbie to knowledgeable in less than 60 minutes. Use the link in the show notes or just type in the URL you see on your screen, swan.com/welcome. This will help you get going on your Bitcoin journey because it's not just about buying something, it's about knowing what you're buying. And with that, we're signing off for today. This is Dante Cook with swan.com. Happy stacking.